All right, let's go ahead and get officially started here, everyone. We are going to have a great hour, I think. Welcome to today's webinar titled The Covered Call, What It Is and How to Trade It. And if you're looking for a way to supplement your retirement income, pay for your kids' education, or just the goal of creating greater financial freedom, okay, today's going to be an important session for you, I believe. Today we're going to talk about and we're going to learn about the simplest and most popular income strategy available to all investors. It is especially popular with retirees, and I'll talk about my background in a moment as manager of retirement services. It's an important part of generating income. It is considered the safest option strategy, which is why, I tell the story when I took my Series 7 exam back in 1992, and at that time, the only option trade you can do in an IRA account was the covered call, right? Because the idea of a covered call trade there was no added, risk involved in doing the covered call trade. So all mainstream brokers would allow you to do it. Now, today, there's a lot of option trades you can do in your IRA account, but that's kind of the history there for that in the for the covered call. Hey, Tom, good to have you here. Glad you can make it. So that's what we're going to talk about. It's a very popular trade, um, and a very easy trade to implement. For though, again, a lot of folks said they were not, hadn't traded covered calls or weren't familiar. So I want to start with a quote, and it's the definition, the most straightforward, logical, reasonable definition that I've seen, right, to try to explain in one or two sentences what a covered call is. And it comes from a gentleman named Lee Lowell. He had written a book called Get Rich with Options. Dr. DeLito, our founder and mentor, had read the book and recommended it to us here in the education department and said, this is a great book, read this book. And I came across, when I'm reading the covered call chapter, and I've got to chat with Mr. Lowell about this, and I use this quote here. He said, if you own shares of stock and you're not selling call options, you're throwing away free money. And then this highlighted portion here is this is all a covered call is. For those who are new to this, um, there are traders out there who will give you money today for the right to take your stock away from you if it reaches a much higher price. Okay, that's all a covered call is. And I'm going to explain the details of that, but somebody's paying you to say, all right, I'm going to give you money for the right to take your stock away at a higher price. Okay. Selling covered calls, Mr. Lowe goes on to say, is such a great strategy for padding your bank account. Still can't believe there are investors who are not taking advantage of it. And quite frankly, neither can I. Our friend Jerry here was one of our clients, one of our students. He had gone from, these are his words, hit or miss with no methodology to generating a consistent monthly income. This when he had gone through our training, and this is the success that he talked about and let us know. So he went from being, this hit or miss with no process to where he learned how to trade covered calls. At this point, he had placed 44 covered call trades with a 70% win rate. He was generating over 2% per month of consistent income. Right. So that's the power of understanding the covered call and being able to generate this income. I see certainly some familiar names, and welcome to the folks who are here. I see a lot of names that I don't recognize. So thank you all for being here. Again, my name is Jim Penna. I'm the manager of retirement services here at VectorVest. I've been with VectorVest now for going on 16 years. I moved down, as I mentioned earlier, from Connecticut about 20 years ago, I guess, because I got tired of shoveling snow. And my two boys were young enough to make the move. So it's been great being here at VectorVest for all that time. I got into the securities industry back in the early 90s, right around 91, 92. I took my Series 7. My background was more as a working on trading desks. I worked at a smaller brokerage firm on the trading desk, and then a market maker for a larger firm up in the New York area. So, um, um, but when we came down here, I was lucky to find VectorVest, and I've been here a long time trying to help retirees and investors use this program. Now I am part of a larger team here. Our education team is made up of some really great folks. So where's Brian? Brian is right here. John is right here. So we've got our team ready to go for you today. But VectorVest has been around now for over 30 years, right? At least 30 years now, and we're dedicated to helping you achieve a secure retirement. So that's what we're trying to accomplish here. Let me walk through a quick roadmap of our class today so you know what to expect. So we've got a step-by-step plan here that we're going to follow. First of all, I'm going to talk about a covered call, how it works, right? What is a covered call? How does it work? I'll walk through that. We're going to look at a case study of an actual trade that we had entered into in our retirement coaching group. It was done with live and a live account, live money for our coaching group studies. We'll walk through that. One of the beauties of any option trading, but specifically to covered calls here for us. So there are so many benefits to them, right? The versatility and flexibility of options in general is why you should understand and want to trade options. But specifically for covered calls, I'm going to walk through four of the core benefits of why you should understand covered calls. Then I'm going to walk through a system to show you the importance of a step-by-step process, right? Instead of just going out and kind of winging it and not being sure what to do, how to manage your trade once you're in it. And there are important steps involved there. Finally, we'll talk about using those steps, okay, if it's your first trade, or at least your first trade using a quality process for you. And then, as I said, Brian, John, and I will stick around and we'll host a Q&A section for, as long as you guys want to be here. Okay. All right. A long time ago, when we used to go on the road to do our seminars, and I remember one seminar, I don't even remember when, it was so long ago now. I had come back and I was chatting with Dr. D about the seminar we had just conducted. And, I relayed to him, I said, in some form or fashion, the questions that we get for the retirement minded and from the retirement minded investor was, how do I keep from running out of money in retirement? Okay. And I told him, that's kind of the general question I get in different forms. And he said to me, Dr. DeLito said to me, in only the way that he can, he said, James, just tell him to keep making more money. Right? That's what he told me. And I never forgot that. And that's what I'm here to do today for those, whether it's retirement or just building a portfolio for a way to generate income, whether you're paying bills or, you're, you want to go on vacation, or you just want to build that money, whatever it is. I'm going to show you how to do that today. So if you guys are ready for that, like I said, I'm going to try to interact with you. Do me a favor, type in the chat box, yes, I'm ready. Get to it, hurry up, however you want to phrase it. Just let me know you're ready to go, and we're going to talk about the covered call and hopefully spend the time to make you a better investor and a more successful investor. William says, release the hounds. Let's do this. All right, let's do it. Okay, I just want to make sure you guys are still with me. How does a covered call work? Well, let's take a look. We're going to see what the trade looks like from both the buyer's perspective and the seller's perspective, right? It's important to understand both sides of that. So we've got two people here, okay? You have an option buyer and you have the option seller. So I'm going to walk through, again, this is the basic foundation of the covered call. What happens? Well, the option buyer pays money to the option seller. And in exchange, the option seller writes or enters into a contract, okay, and gives that contract to the option buyer, right? The two parties have entered into a contract. And you'll hear me use the phrase, right? A contract, the definition of a contract has very specific and certain terms and conditions. Okay, strictly defined terms and conditions of a contract. And that's what we're going to walk through here. So just to be clear, that's why an option seller is also referred to as the writer of the contract, right? He writes the contract because he's the seller. So you hear me talk about the trade, the covered call called a buy right, where I buy the stock and simultaneously sell a covered call, right? That's a buy right because as the seller, I'm writing the contract. Okay. Now, the option buyer pays for the right to buy or sell a stock if he's buying a put or a call option. Naturally, we're going to be talking about call options here today. So the seller gets paid, right? So the buyer pays and he takes on he gets rights, right? He has a right to buy or sell a stock depending on the option. The seller gets paid, right? But he doesn't get paid for nothing, right? He takes on obligations. Okay. So now he has obligations. Let's talk about the two types of options that there are. Let's specifically, we're going to look at, the call option, right? But there's put options that give you the right to sell the stock, but that's not what we're looking at. So if we're looking at with a call option, okay, the option buyer pays money to the seller, like we said. Okay, the option buyer just bought a call option. Now, this option buyer has the right, but not the obligation, to buy a stock at a certain price by a certain date. The option seller got paid, but now he takes on obligations. He is now obligated. If the buyer decides to exercise his right, the seller has to provide the stock, right? Remember, he got paid to take on the obligation of supplying that stock. Okay. So you see how it goes together, and the contract, like any contract in any business, right? There's rights and there's obligations that go in. The buyer has the right to buy, the seller has the obligation to sell. Okay. So before I move on, I know that's just the opening part. I want to make sure everybody's good with that before I move on with some of the other things that we need to understand in the contract. Okay. There we go. All right. Takes a second to come through. I want to go through this for the folks who have not traded covered calls before. All right. So that's where we're at. Now let's take a look at the next part of this. When you see an option traded or listed, it might look something like it looks here, right? I remember in the old days where, you used to have to call in your trades, right? Where you couldn't type them in all the time back then, right? And you'd call your broker and you'd say, I want to buy one Apple June 165 call at 550 or 5.5, right? That's what the order looks like. That's what the option trade would look like. Remember, I'm just talking about buying the option here. Right. So what I want to walk through is the anatomy of what all that means for those who might not know what that means. Let's break it down piece by piece. All right. Remember, we said right when we talk about the contract, this first part, the highlighted part here, all that what that represents or what it refers to is the number of contracts that the buyer is entering into. Okay. Remember that each contract controls 100 shares of stock. So the buyer here, right, has the right, he bought one contract, so he has the right to buy 100 shares of Apple. Okay, which means if this buyer exercises his right to buy, and this seller is the word that's used is assigned, he has the obligation to provide that stock to the buyer. Okay, so that's the contract. 100 shares, one contract of Apple. Next, let's talk about the price because they have to work out. Remember, strictly defined terms and conditions. Let's talk about the price. So it's the strike price that we're going to talk about. Right? That's where they strike the deal. The buyer says, I have the right to buy 100 shares of Apple at $165. because that's what I paid you for. Okay, which means that if exercised, if he exercises his right, because the seller is assigned, the buyer exercises. So if he's assigned, he has the obligation to sell 100 shares of Apple at $165. Again, the strictly defined terms and conditions. Now, those rights don't last forever, right? A contract has an expiration date, right? It goes away at some point. So let's talk about the expiration date, which brings us back to June. Okay. The expiration date is the last day to trade the option. It's also the last day the option buyer can exercise his rights. We use the options expire for the monthly expirations. Okay, on the Friday before the third Saturday of the month, there are a lot of stocks now, more and more, that offer options that expire on other days, like weekly options or some of the index options. There's every day, which is why most brokers will list the exact expiration date for you, right? So usually you would see it. In this particular case, it would be June 16th of 2023 if you were looking at a monthly expiration right now. Okay, so when we go through, it says, my rights expire here. You have to know this, right? The third Friday of June, my obligations end the third Friday of June, and that option contract just goes away. Okay, so we've talked about the contract, the strike price, the expiration date. Let's go ahead and talk about the premium. Now, the premium is what the buyer will pay for the rights that he acquires. Okay, we call that the premium. So in this example, at $5.50 means he's willing to pay $5.50 per share, okay, per share for the right to buy 100 shares of Apple at $165 per share. That's the strike price. He's willing to pay $5.50, or for one contract, $550. And the seller says, yep, pay me. Right? I'll give you that right, but you got to pay me for it. Okay. So that's the setup. That's what a covered call is, right? Now, well, I'm sorry. That's what selling a call is, or selling an option, whether it's a call or a put. Now, the covered call, okay. Now, specifically for the covered call, right? All it means is that you own enough shares to fulfill your obligations without having to go into the open market and buy that stock, right? You already own it. I own 100 shares of Apple already, and I'm willing to, remember, go back to the definition. Somebody's willing to pay me to take my Apple stock away at a higher price. So he's going to pay me that and take it away, hopefully at a higher price. And all I'm doing is making more money. Okay. Because keep in mind, right? So selling a call option, which is referred to as a naked call if you don't own the underlying stock, is one of, you have to have the highest level of options trading approval with your broker to do that. Why? Because it's a very, very risky trade. If he sells the right for this guy to buy 100 shares and he doesn't own the underlying stock, and Apple suddenly, for whatever reason, goes up to $200 a share or whatever, the seller has to go out into the open market, buy it at, again, I'm just throwing numbers out, $200, and give it to this guy at 165. So it's a very dangerous, risky trade if you don't know what you're doing. So hence the covered call, right? Makes it a very safe trade and makes it a very good income trade because you already own the shares. Okay, that's an important concept. So that's what a covered call is. I already own enough shares to fulfill my obligations without going into the open market to have to purchase them. So the best way to, I think, convey this is to actually show you that, again, this is Alcoa Corp. This is a trade we did. This was last year, but a trade we did in our coaching group. This was an actual live trade. Let's walk through it. So at the time of the trade, Alcoa was trading at 74.04 per share. So $74 per share it was trading at. Okay. You'd sell a call option on Alcoa with a strike price of $75 and an expiration of March. Okay, this was done in February, so we would sell the March 18th, which would be the expiration date last year for the March expiration. And we took in $4.42 per share. Okay, we sold the right to someone to take our stock away at a higher price at a later date. They were willing to pay me $442 to do that. Okay, so what happened? What does this mean? Okay, since one call option controls 100 shares at $4.42 per share, I just took in $442. Okay, $442 of cash went into my account. It's my money, right? You keep it. Now, how much you keep of it depends on what happens during the life of the trade, of course. But that money is yours now. So here's the strike price is up at 75, and our expiration in this actual live example, or what was a live example, was the trade was done in February and we sold the March expiration. All right, we'll talk about the proper setup in a bit and when to sell these. Okay. So if Alcoa is over 75, here's the kind of the what if, right? What happens once this trade is in place? If Alcoa is over $75 at expiration, it would be what's called in the money, right? I would be obligated to sell my Alcoa for $75 a share. In other words, at expiration, that Friday, March 18th at 4 o'clock, okay, I am now obligated to sell my stock at $75 a share. In other words, my stock will be called away. That's what a call option is, right? I buy a call option, I buy the right to call away someone's stock, right? I'm going to call it away. I'm going to own it. And if the stock is trading at 75.01 on Friday, March 18th at 4 o'clock, 4:01, right? On Monday morning, I'm going to wake up with 100 less shares of Alcoa in my portfolio. Okay, that's what happens at expiration if the stock is above the strike price, or in other words, in the money. But since I do own 100 shares, right, I would sell my shares at the strike price. Now, if I did not own the shares, okay, let's say Alcoa went to $80 on that Friday afternoon and I was sold a naked call, right? Let's assume for a minute I didn't own the shares, right? Well, Monday morning I'm going to wake up if I didn't own the stock and I'm going to be short 100 shares of Alcoa. Now, if Alcoa is trading up at, 80, whatever the number might be, $85, I got to go out in the open market and cover that stock. And in fact, your broker will do it for you. Trust me, if you're short because you were assigned, especially, if you don't have the money to cover it, they're going to go out and do it for you, and you're going to lose a lot of money. But here, because you own the 100 shares, they're simply taking your stock away at 75, a stock that we owned at 74.04. Okay, so that's what a covered call looks like. Long the stock here, I sold the right to take it away here. If it goes up, great. I keep my $442 and I make another 96 cents on the underlying stock. Now, what happens if Alcoa is below 75 at expiration? Now, you will not be obligated to sell your shares. You will keep your 100 shares of Alcoa in this case. Okay. And at expiration, we would keep our premium of $442, okay, that the buyer of the call option paid us, right? That's where that 442 comes. The buyer of the call paid me to take my stock away at a higher price. So the 442 remains mine plus whatever profit or loss I have on the 100 shares. So let's say real quick, the stock closed at 74 and a half, just as an example, a theoretical example. I would make, well, in this case, 46 cents of capital appreciation is where that would be I'd still own the stock and the stock would be basically flat. So I'd be okay. But now this 442 is definitely mine because the option expired. So I would make roughly 442 plus a few, half a point on the stock. Now, of course, if the stock were to go down, right, there are risk management techniques that have to be in play just in case the stock goes down, right? But remember, I'm going to walk through this trade again to illustrate it to you in even more with more numbers to it in a moment. But I just wanted to break this trade down to show you again those strictly defined terms and conditions. But we're going to come back to this and fill in some of the numbers a little more closely. Okay. I said earlier the flexibility and versatility of any option trading is such a great tool to have in the toolbox that for those of you who have never traded cover calls or maybe never traded options, I strongly urge you not to be part of that crowd that kind of puts their hands up and rolls their eyes and say, "There's no way I'm trading options. I don't understand it. I can't do it." You can, okay, and if you can, and you can do it in a prudent, conservative manner when you do it the right way and you have a process and a plan in place. Now, there are four big benefits of covered calls, specifically covered calls, as there are on many option trades, right? There's an objective and a rationale between um, the different types of trades you're going to place. But the big benefits include generating income, okay, being able for stocks that you already own, you can sell covered calls against, and you could use it as an insurance policy, downside protection. There's some great trades to do there. Selling covered calls against stocks you own with fairly significant unrealized gains is a great way to manage a portfolio or positions in your portfolio. How many of you have ever owned a stock, right? Whatever it is, ABC stock I own. I bought it at 40. It's trading at 55 or 60. What a great trader I am or investor I am, right? But what happens? You get greedy. If it went from 40 to 60, it's got to go to 80, right? Well, as we know, that doesn't always happen all that often. So if you have a good quality trade in place, you sell someone else the right to take your stock, that stock continues to go up and they take it away because you have no choice. You've been assigned. That's a great way to manage a profitable trade that's already in your portfolio. Okay, that's when you sell stocks against stocks you already own. And then you can profit even if a stock doesn't go up. All right. Now, what I want to do is walk through these four benefits of covered calls. I'm going to save generate income for the end. So I'm going to start here with downside protection and illustrate that for us quickly. Then we'll talk about eliminating the greed factor, what happens if the stock doesn't go up, and then I'm going to come back and talk about generating income. So I'm going to start with downside protection. Let's go back to our Alcoa trade. It was trading at 74.04 per share. Okay, we talked about that. I sold a covered call against the stock. Okay. Actually, I think in this trade we actually did 200 shares and two covered calls. But for now, for our purposes, we collected $4.42 per share in premium from that call that we sold. Okay, remember, we got paid. So what did I just do, right? We talk about using it as protection or what I like to call a cushion, because what I just did is I reduced the cost basis of this stock by $4.42. So I don't own the stock at this point at 74.04, right? My cost basis to own 100 shares of Alcoa right now is at this point is 69.62. Okay. So here's the stock price. Once I get paid my 442, it's down at 69.62. So that's a cushion that has been placed there. Now this stock can actually go down $4.41 and I don't lose a penny. Right? One of the great uh, uh, advantages of selling covered calls. So that's $4.42 of downside protection. Okay. And that's for whether you're doing what we call the buy right, or if you're doing it against stocks that you already own in a toppy or uncertain market, right? Maybe you've got stocks in there that you've owned for a long time that your long-term hold is still in place. But there are times in the market where you don't have to just sit there and watch your stock move sideways or go down. You can get paid while you wait and lower your cost basis and build that cushion there as the stock goes down. Now, again, you're only that cushion is $4.42. If the stock really craters here, there are other risk management techniques in place, but it's good to know that you've got that cushion. So that's the downs. Just a peek at the downside protection of of covered calls. Let's talk about eliminating the greed factor. Now, this is uh, an advantage of covered calls that you don't hear a lot about. I've been most recently trying to push this idea more and more. But what if you just bought 100 shares of Alcoa when it's trading at 74 per share instead of doing the covered call, right? So you own the stock here, right? The market trend said it's okay. Your due diligence said it's a good stock. It's rising in price. Okay, you own the stock. Now, after you buy it, the stock did do what you expected it to do, right? And it moved higher. It went all the way up to $90 not long after that purchase. Again, this is an actual trade here. For many people, greed kicks in and they don't know when to exit the trade. Right? I want to trade at 74. It's suddenly trading up above 90. What do I do? Right? Well, one thing you can do is nothing. Right? You can do nothing, and you end up giving back not only your gains, but now, and it didn't take long for that stock to turn over. Right now, it's trading all the way back down at 70. Now you're underwater, and what do? Well, one thing you can do, right, again, is nothing, and watch the stock go down even lower. If you did the covered call, however, remember your trade has a built-in maximum profit, which helps eliminate the greed factor. When you sell a covered call, your max profit is limited. You have limited yourself to how much money you can make on that trade. Some people look at that as a disadvantage of a covered call. Okay. Right? Because if it goes above, in this case, when it went above 75, if I waited until expiration, right, they would take my stock away. Okay. Some people look at that as a disadvantage. My point is, if you own the stock at 74, maybe you own it down here at 44 or 54. Right? When you sell that covered call, when you sold that 75 strike, right, it locked in that profit for you and took away that greed factor. So I think it's a really big advantage to understand that, again, for stocks that you have an unrealized gain. Now, in this particular trade, this actual trade on March 4th, we exited the trade and walked away with $914 of income. Okay. So that was a great trade that we did. Of course, we followed a process to do that. Okay, the stock wasn't called away, but the trade management technique said we're not greedy. Okay, we know we have a, a max profit that we can meet, and our process says that also that there's an expiration date, that this trade is going to go away. Let's be smart about this and manage it correctly. And this was one that worked out really well. So um, that turned out to be a great trade. Now, profit even if a stock doesn't go up. So let's just take a look at that as well. So sometimes a stock can look great, but after you buy it, right, it begins to kind of move sideways. So in this case, it was Occidental Petroleum. Stock's at 59.64, right? The stock doesn't always do exactly what we want it to, but if you just bought the shares of the stock, right? I mean, it didn't crash here. It's not like all of a sudden the stock went down to 30, so it's not that big a deal, but the stock didn't do what you expected or needed or wanted it to do. But what if you had gone out and sold a covered call against it? Well, you make money when your stock goes sideways. Remember, you got paid. Someone paid you to take your stock away at a higher price. Now the stock goes sideways, what's called time decay. Remember, an option is a depleting asset. The closer it gets to expiration, it begins to lose time value, right? So the value of that option decays. So instead of sitting there with a stock that's just moving sideways, you got paid to wait through that, and you're going to make money doing that as well. So on this particular trade, this was another live trade we did. We sold a covered call on Occidental with a $63 strike price. We owned it at 59, right? And each day, because the stock was moving sideways, the call option began to lose its value. And remember, when you're short, that's okay, right? I sold it at a higher price. The price goes down. I'm able to buy it back at a lower price. So in this, whoops, I'm sorry. So in this particular trade, after 3 weeks, Oxy went nowhere, but we closed our covered call trade with $448 profit in just 3 weeks. Again, as an income trade. So that is a great way to trade these. And just to be clear, if you place a buy right on these, of course we have risk management techniques that if something does go wrong with the stock, if there's something in the overall market or something specific that you couldn't see coming, we always will have risk management techniques to minimize our losses to the downside, more than just that cushion of the premium we take in. Okay, so we'll have stop criteria on the position, just to be clear on that. All right, now I want to get to really the core benefit, and what I really want to focus on here today is generating income here. Okay, excuse me, I had to sneeze there. Let's talk about generating income, and I want to talk about the 5-step plan, what we call our covered call system or process that we use every week in our retirement. Well, not every week, that we use in our retirement coaching group when the market is favorable. So let's go right into the 5 steps, because I said every week, but it's important to understand, to know when to trade, right? Just like any trade that you do, stocks, options, whatever it might be, you have to know when to do the trade. Is the market favorable for the type of trade that you are implementing? I'm talking right now about a system for the buy right, where I buy the stock, I sell a call option against it, just as we did in Oxy and we did in Alcoa, with the objective, the rationale behind the trade is to generate income. Understand that the buy right is a bullish trade. You're buying a stock, right? Selling covered calls can be a bearish trade or a protective measure if you're doing it against stocks you already own. But when you do the buy right, it is a bullish trade. So the when to trade part comes in and plays a very important part. So for those who are new to VectorVest, if there's anyone in the room who's new to VectorVest, um, we make sure that we're doing this trade during an overall bias on the market. It has to be bullish or the market is in an uptrend. One example is what we call the green light buyer. So in our color guard, when we see a green light in the price column, it means, our VectorVest composite price is up week over week and day over day, indicating, at least in the short term, an upward trend. We have other indicators that are a little more prudent, like our DEW timing system, which is a great time to consider entering into the buy right trades as well. But the key principle there is that you have to know when to trade it, right? In this case, with the way the market's been for a while now, even with our sort of rallies in between, the market has not been performing well. And so a bullish trade would not be, there have been some times where you could have done them, but overall it is a bearish trade. So we're looking to make sure we're looking at an uptrend in the overall market. So knowing when to trade, okay, is very important. Next, after you're comfortable with the direction of the market and it's a favorable direction, you want to select what stock to trade. Okay, we want to be able to find good quality stocks with above average safety, rising in price in a rising market, right? The VectorVest mantra: safe, undervalued stocks rising in price in a rising market. That's what we're looking for. Right? Nobody does it better than VectorVest to help you find those type of stocks. Okay. The importance of having a process and a system to place the covered call trade, to place the buy right, now comes into play. The importance of it really kicks in here, because now, once you have your market bias, once you have the underlying stock, you have to remember that just because it's a good quality underlying stock may not make it the best call option candidate for you, the covered call option. Okay. You have to keep that in mind. So what we're doing is we're going to set up the trade, and we're going to make sure of a few different factors, right? We're going to be selling out of the money calls, right? It's hard because depending on the stock, there may be $1 increments, could be $2.50 increments, $5 increments on the call option, right? On the strike price. So when I say out of the money, that's where do we strike the deal, right? What option expiration am I selling? What strike price am I selling? I apologize, not expiration. What strike price? Okay. So if ABC stock is trading at 50, for example, trading at $50 per share, I'm going to sell someone else the right to take my stock away at maybe $52.50, maybe $55. Who knows? Maybe 60 if the premium fits our other guidelines. Okay. For those who are familiar with options, what we're talking about is a delta below 50. Usually we look somewhere between 35, 40 delta. For those who are familiar with delta, that's another way to explain that. The expiration, I'm sorry, I skipped ahead. The expiration we're looking at is 30 to 45 days out. So we're looking one or two strikes out of the money, 30 to 45 days to expiration. There are some other factors. We got to make sure there's liquidity in the option. So we make sure there's some open interest. We make sure the bid-ask spread is favorable. But those are the kind of things you do, whether it's a stock or an option anyway. But there are factors that go into saying, okay, even though I found a good stock, is it a good options candidate? And that has to be part of your process when putting your plan together. Once you place your trade, you want rules to manage the trade. It's not only that you want them. You need rules, right? You need rules to manage the trade, because just like when you buy a stock, you shouldn't buy stock and not know what your rules are to get out, whether it's to the upside or downside, because that means you have no process, you have no plan, and it ultimately means you're probably going to fail in the market, quite frankly. Right? You have to have a plan in place. Understanding when to trade, what to trade, how to set up the trade, if I'm being straightforward, is kind of useless if you don't know what to do once you're in the trade. Okay. So earlier we talked about eliminating the greed factor. So part of your five-step process has to be a plan in place. So remember, we know exactly what our max profit is. We know exactly what we can make in the trade. Okay. What our process does, we try to eliminate the greed, and I get out of these trades if and when my trade has reached 80% of those max profits. I'll say, good job, pat myself on the back. I did a good income trade. I'm not going to stick around and hold this to have something go wrong for another 20% of profits. To the stop, to the downside, we have a very specific process where we place our stop position on the entire position. Remember, we're talking about a buy right. So we look at remember I said earlier, Alcoa had a $74. We bought the stock. We took in the $442, 69 and change was our cost basis for the entire position. So I would place a stop loss the same way I would with a stock. I'd place a stop loss. I'll just use a number. Let's just say I I paid $69 and change. That's my cost basis for this position. If it goes down to say $65, and this is the aggregate of the short call and the long stock, then I want out. That's where I would set my stop. Right? Remember I said earlier, if the stock really does crater on you, we're going to manage it beyond just the cushion the covered call gave you. Okay, so it's very important to have trade management uh, process and a plan in place. Otherwise, all of this becomes kind of useless. Finally, once you know your plan, you can place the trade with your broker. When you do, what we try to do is, we talk about the midpoint, trying to middle the trade. Okay, that's one thing you can do. I would take it to another step. You can put the trade in at the ask price or just below the offer or ask, same thing, right? I I don't want you to miss a trade because the spread is too wide and you're trying to middle that trade, right? If you're doing 100 or 200 shares or whatever you're doing, even 500 shares, I don't want to miss the trade for 15 bucks or whatever. The key here The key here is right here. Do not enter a market order for these trades. Okay, just don't enter a market order. I can tell you as a former market maker not to do it. I remember sitting on the trading floor, you look around and you see traders kind of laughing or smiling. You know they just got some market order where they're able to literally now I know times have changed. It's been a long time since I've been on the trading desk, but they're smiling because you placed a market order and they get to make more money from you. I won't go into all the details on how now a lot of things have changed. There's a lot of electronic networks now, so you don't have to worry too much about it. But just don't place a market order. Place a limit order either in between the bid and the ask or somewhere around the ask point there. Okay. Just don't place a market order. That goes for any trade that you place at any time. Okay. So those are the 5 steps that that every investor who's looking to profit from the buy right trading calls that you have to have in place. Okay. Now it's also the same system that we had taught Jerry. Right. Remember, he had no income strategy. In fact, he said he was hit or miss. He had no process at all. Again, these are his words. But he started trading covered calls using this system and now has a consistent monthly income. Remember, in his first 40 trades, he had 70% winners and a monthly income of 2%. That's 24% a year just in covered call income. And I put the qualifier, the caveat that was during an uptrending market. It's during an uptrending market. And I know someone had typed in earlier when I talked about making money selling covered calls, doing the buy right. Somebody typed in, not in this market. And you're right. But let me ask you, what better time to learn and understand when to take advantage of this trade than now? Even though, I know the market's up today. I'm not looking at the daily movement. I'm talking about the overall markets here. Right? What better time to learn and understand it than now? Because every market cycle will run its course, right? We're in a bearish market, I say bear market. I know it's a little different in the VectorVest program as a bear market scenario, but we're not quite there, but we're close, right? From November of 2021, when all of the indexes were hitting all-time highs, many of them, right? That cycle will change. And my goal, my purpose here is to hopefully get you to be prepared, to be ready to generate income in your portfolios, because this market trend will change. The market, you know, there'll be another bull market. I learned that in the 30 years I've been here. I learned it in the history that I've read and learned about in the markets. So I want you to be prepared with this trade in hand. Okay. Now I can't know exactly why you registered for today's webinar, but I'm going to take a couple of guesses at it. Okay. Maybe you see or hear about other people using them, like Jerry, maybe a friend, a coworker, and you want to do it too. Maybe you saw it on TV or read an article about it on Google or whatever, right? You don't want to be left out. So you want to be able to understand covered calls. Maybe that's why you're here. Maybe you've already seen how inflation is depleting your savings, right? Inflation, sure, it's peaked and has come in a little bit. Okay. But if you're not making returns above the rate of inflation and the rise in interest rates, then you're losing money. More of your money is going towards putting food on the table, paying your bills, and you as we said earlier, you don't want to run out of money. Maybe you've always been interested in learning covered calls. Maybe like folks in the beginning said they do trade them, but maybe you've never had a system. Or you've been looking for a way to generate, added income. This is not meant to be your sole source of investing here, but you're looking for some extra income. You feel covered calls might be the right thing for you. I can tell you that they are. When done the proper way, done the right time, it's going to answer the question, how do I keep from running out of money? Dr. D said, James, tell them to keep making more money, and that's what I'm here to do today. And that is the power of covered calls. It provides you a way to keep making money. Okay. I'm going to take a sip. I'm going to ask you guys, how would it be for you? Would you answer this yes or no? Would you like to be able to place a covered call when the time is right to generate some extra income? I think I know the answers, but I want you guys to type it in. Okay. Would you like to be able to do that when the market says it's time? William says, of course. Dave, several people are typing, of course. Glenn says, already do. Fantastic, Glenn. Tom, yeah, I know Tom loves the cover calls. He does them off. So many people are typing yes. I can't count all the folks. Mark, Tom, Maria. Peter says he does them often. Yeah. Sharon says, of course. Okay. The important thing, as I tried to convey, is that you have to have a step-by-step system to do it. Right? That's no matter what type of trade, no matter what you do in anything really, outside of trading or investing or whatever you do, you got to have a process. You have to have a plan. So here at VectorVest, we have put together what's called the Covered Calls Bootcamp. In just 7 days, you're going to be fully trained to place your first covered call. As you saw today, having a way to generate consistent income, I believe is a must if you want a lot less worry in your retirement as you prepare for retirement. Let me show you how we've laid out the boot camp and show you the system that we have put together. Our training sessions will guide you step by step from beginning to end. We'll start with the basics, the basics of options, Again, we'll go even deeper into what a covered call is, how it works. I will make sure, even if you're brand new or if you're scared of options, right, that you will be successful. After that, I'll guide you through everything you need to know from when to, again, the 5 steps: when to trade, what to trade, how to set up the proper candidate, the expiration, how many contracts, how to allocate assets to this. I'm going to lay that all out for you. After that, I'll show you the rules to manage the trade. Again, in my opinion, the most important step of all. And then I'll show you exactly how to enter your order, how to place your stop order and your limit order to the upside for our profit target. We'll show you exactly how to do that with different brokers. Okay. I will teach this to you live, and it will, and you'll have access to all of the training videos. We have in the VectorVest University, and I'll show you in a moment what it looks like. Training videos, all of the resources, the live sessions are all recorded and archived, right? In case you miss a live session or you want to review it later on. Okay. And if you decide to join the bootcamp today, you can actually get a head start. You'll have access to all of this, and I believe you have access to it for a full year uh, of time to get a head start before we even do our live sessions. So all the training videos are available once you sign up, and you can start going through them today. To join the bootcamp today, while we're live on this webinar, we've dropped the price down because you were kind enough to spend time here with us today to $395. Registration will close for good on this coming Monday, I believe at 5 p.m. Registration will close. So if you're ready to begin placing covered calls, join us in the bootcamp. Go to vectorvest.com/cc bootcamp. And Brian was kind enough to put that link into the chat box. So you could go right into the chat box now. Go ahead and click that link, and it'll take you to the registration page. And I'll go ahead and click that in a moment just to make sure you guys can get up there. So remember, $395 rate is only good while we're on this webinar. For those who are here, we're going to stick around. John and Brian were kind enough to answer a lot of questions in the back, but I'm going to have ask Brian to come in, and we're going to make sure we answer any and all questions that you guys have. Okay, so take advantage of that while you can. And here's a big part of this. We believe so much in this boot camp, right, in this process, that we offer a 100% money back guarantee. 100% money back guarantee. Okay, you can go through the boot camp. If you're not satisfied, just notify us within a week of finishing the course, and we'll gladly give you a refund. That's how confident we are in the fact that you'll appreciate what you learn there. Right? We just want you to give it an honest effort there. Okay. They say there's no such thing as a risk-free trade, right? No matter how the market's going, no matter how quality you believe the stock is, you hit the enter button, you're taking a risk, right? There's no such thing as a risk-free trade. Well, this is a risk-free trade that you're placing here. Learn the process, learn the specifics of how to do this the right way to generate that steady income, and it'll be a risk-free trade for you. VectorVest.com/cc bootcamp. Join today. Take advantage of the special price. Once you join, or should I say enlist, right? Once you enlist in the bootcamp, do me a favor. Type in the chat box, "I'm in." Let me know that you went into that link and that you were able to get in. And if you've enlisted, type in "I'm in." Tariq says "I'm in." Michael says "I'm in." Terry says, "I want to be in, but the page is still not opening." Okay. Brian's going to, we're going to talk about that. We'll put the phone number in if you have any issues getting into the registration page. And this is what it will look like. I just clicked on the link that Brian put in there, and this is where it'll bring you to. Okay. If you have any issues with that, should get in there.
All right, Jim.
Hey, Brian, I'm sorry. I was looking at, so someone was typing something in there. I'm sorry. I paused there for a second. Hi, Brian. Brian's
Gives
going
you
to
a,
come in. We're going to answer some questions and the best we can. Hi, Brian.
yeah, I think a lot of the questions are about like the modules themselves. So we could do this a few different ways. There's number one that you mentioned this, which all the modules are available, all the training videos are available immediately. But
Yes.
you're also going to teach them live over the series of days. So somebody could jump in there and watch all of this training that you're showing here on the calendar. They could watch it right now, like right after they order. They could watch all that training. But if they want to attend live with you and hear you talk about it live and experience a live Q&A with you after each of those sessions, uh, those are the dates they'll do them. So, Jim, maybe why don't we talk about this calendar first? Talk about that. That'll answer a lot of the questions about the sessions, and then we'll do something else after that.
Great. So, yes, as Brian mentioned, you sign in now and you're going to have access to all of the resources and all of the recordings, so you get a nice head start. This calendar I'm showing you is on May 23rd, so next Tuesday. We're going to begin our live training, right? This is when our boot camp starts. We're going to do get started. We're going to talk about option basics, how a covered call works. And then each day we're going to have our live sessions walking through step by step the proper system, right? And then right after Memorial Day, we'll meet again. This is all 4:30 Eastern time each of these days. And we'll meet again and we'll go through our checklist. So at the end of all this, you're going to have a checklist. You're going to be able to walk right through. And then that following Wednesday, we'll go out and place our first trade. We'll walk through step by step. I'll show you exactly how I use the process, and we'll enter into a trade. Okay, what we'll do um, um, after that, we'll have our trade review uh, on that Wednesday. And then we'll finish out the boot camp with two live Q&A webinars, both at 4:30 for any questions. Once you're trying to place a trade, if on that Thursday or Friday you're looking into it and you have questions, we're going to meet at 4:30 to walk through that as well. So again, as Brian said, you're going to have instant access once you join here today. You can get a little head start on it all, and you're going to be ready to go. Brian, if it's okay, I'm going to go through these slides as you choose out any questions that you think are pertinent here. But what I want to show you is what the actual site looks like in the university. So this is what the course will look like. We'll have our lessons here. You have, welcome videos, the schedule. We'll walk through what an option is, and all of these are going to go step by step here. Each video is going to be there for you. They're not super long videos. They're going to go step by step, when to trade, what to trade. Okay. All of these videos are here for you, when to trade. Okay. So that's what the course looks like. There's a quiz even. We have walkthrough videos, right? Where we actually have the tutorial in specific brokers, how to go in and place your trade. So there's a lot of information that's available to you here. These broker help videos alone are very valuable to you, I believe. Okay. The links for the sessions, once you join, if you're in, you'll be able to just simply click for the live training, right? So the links are available to you there, and then you can print out the slides if you choose to. That's why we even put black and white and color. Don't print the color slides. It costs you a lot of money in ink. Right. So you can click those, and then of course we have a checklist, and then a special bonus. We have a trading spreadsheet that we use in our coaching group that you'll have access to once you join. It sets up. People were asking about, where the stop is, where the limit is. How do you set it? This spreadsheet will actually autofill for you, tell you exactly where you're placing your stop, where you're placing your limit order when the trade goes in your favor. So all of that's available. Brian, I just wanted to touch on that and give them a look at what it looks like.
That's actually fantastic. That's where some of the questions were going to lead us, because they were asking like, how long are the sessions and what does it look like and things like that. So that to touch on that, as far as the length of the course, like if you were to actually watch all those modules back to back, just the training modules, not including the homework assignments or quiz or the broker videos, but just the training modules. It might take you about 90 minutes to go through it all. Now, Jim is going to spend extra time with you in the live sessions. So if you attend the live sessions, it might take an hour or so, and then there's you have Q&A, because that's where you can go and just ask questions on things. So Jim's great about spending an extra time. Whatever questions you've got, he sticks around and helps you out. All right. And if you miss a session, I saw that, like Michael just typed in it. Are the live sessions recorded? Yes, they are recorded. The recordings are put inside of that course. There's a spot that we'll put those there as well. So the $395 rate is only good while we're live here. The price will go up after the session, and like Jim said, registration closes early next week. Just so you guys know, over the last 3 years, we've only done the boot camp once a year, right? So there's no guarantee like there's gonna be another boot camp, a covered call boot camp for the rest of this year. We've only done it once a year, I think, in May of each year. So we don't have plans right now to do it again throughout the rest of this year. So now's a great time to take advantage of it. Even if you can't attend the sessions live, you get all the training modules that you could watch at a discounted rate.
Yeah, right, and Brian, one thing I checked on, I forgot to mention. So if for anybody who's not a current VectorVest subscriber, you do get 30 days access to the VectorVest program to walk through the process using the VectorVest program. I did check the sheet today, and I just wanted to be clear on that.
Yep. All right. So all of you who are in, I forgot to even welcome. I know you probably already did it, Jim, but all of you who said you were in, we actually had one person say amen. So that's close enough to I'm in. So we'll take that too. So those of you who are in, like Terry just put it in the chat box. If you are in, you should have gotten an email with all the details, like the dates, the times, the directions to get into the course, all of that. Will have come in an email. If you signed up and you don't see it in your inbox, please check your junk, your spam folder, because sometimes it sneaks in there. And that way you can get that and print it out, and you'll know when everything is happening. Okay. All right. So the $395 is US dollars. So I saw Gary just asked, is it US dollars? And Michael, the course includes the Q&A, where you can come to those live sessions and ask questions. Plus, you always have our great support team. You can call our support team and ask questions, and they could help you out as well. All right, so Yaron says, what happens when you miss a session? So the recordings are put inside the course. So first off, you could watch the pre-recorded training sessions. That's where Jim did a nice job of doing the training in as a concise amount of time as possible. So you got it down to like a 90-minute modules, but not multiple 90-minute modules, like beginning to end, the whole thing. But if you go to the live sessions, that's where you could talk to you about kind of like what's going on in the current market, do the Q&A. So that's if you miss a live session, those will be put into the course, but you could also watch the pre-recorded sessions as well. All right. Jim, this was among the many questions about the details. I'll ask William's question in just a moment, but those of you who are asking questions about the specific details, like, oh, what strikes do you pick? What expiration? You're asking all the details. All that's covered in the boot camp. Of course, today's session was an introductory session on what is a covered call and how it works. But all the specific details, the step-by-step, the click-by-clicks are in the boot camp. You check that out. But William wanted to know, does VectorVest help you identify the specific stock to buy and the specific call to sell?
So we walk through a process. I mean, the short answer is yes, right? So our process is going to lay out the system for you. We identify a list of stocks. We look at them, and using the process that I touched on, we have this list of stocks. From there, by the time we're done, there's usually a batch of at least 3 or 4 potential trades to be done there. From there, you choose whichever you may be most comfortable with. Sometimes I don't choose always, maybe what looks like the top rated one because of an industry or a sector, how the market is working. But but generally speaking, the answer is yes, we do. We show you exactly the process to walk through, and it's going to leave everyone with pretty much the same choices there. So yes, the process and using the VectorVest program to do it is going to make you studio disconnected. All right, you still there?
It might be me, but I can't.
Okay.
Your voice kind of cut out there.
All right. Can you hear me now? Can you guys hear me? Hello, check 1 2 1 2.
Well, Jim, if you are talking, I'm not sure if everybody else
Hello?
can hear Jim.
Can you hear
All right,
me
so
now?
I'm seeing notes in the chat that people can't hear Jim.
Can you
So
hear
I
me
can't
now?
hear Jim either. So maybe something happened to his mic. Let me take a look. It says I'm having. So Scott, just go to.
Check 1 2.
You can call our office, Scott. The phone number is in the chat. It's 888-658-7638. All right, so Scott, just
Can you guys hear me now?
I just heard that. I just heard Jim there.
Okay, check 1 2. Can you? Oh, it looks like it's working now.
Yeah, I can hear you now.
Okay. Yeah, I don't know. I touched no buttons. I got disconnected for a second, and I apologize. I don't know how or why that happened, but I'm back.
Yeah, maybe I think it might have been coming through on YouTube, but not in GoToWebinar. So,
Okay. So many moving
so I was
parts.
just telling Scott that he could give our team a call if he needs help, or maybe close all your browsers, Scott, and then open up a browser again and go to vectorvest.com/cc bootcamp. All right. So on the screen there, Jim, it's cutting off the bottom. It looks like it's showing your taskbar. Maybe I don't know if you can click on there and just it'll make that disappear.
Yeah, I don't know the whole.
If not, it's no big deal. Don't worry about it.
Yeah, something disconnected and reconnected all at once here. I don't know what's going on.
There you go. That looks good.
All right.
All right. So Bill said, is there a recommended account size to do the buy right or the covered call system that you do?
Yeah, that's a great question. So remember, you have to buy at least 100 shares of the underlying stock, okay, to do the buy right, or you have to own at least 100 shares to sell a covered call against it. So what we talk about is you can do this. You can generate an income. The number, I don't want to go too low and say, you need somewhere around 30,000, 40,000 to do this. I mean, even 20,000 if you just do one or two positions, and you're not going to be able to do it as often, but you want to be able to allocate enough to understand that you need to buy at least 100 shares. So what we do in actually the live Thinkorswim account that we use in our coaching group, it has about 50, give or take, well, I don't know where it's at now, about $50,000. So at any one point, if we're dollar weighting our portfolio, we're spending approximately $10,000 on each covered call trade. Now, this is all relative to the size of your account, of course. Okay, but I can go out and at any one point have up to 4 or 5 positions in place. Now, let me just be clear. It's not, even if your account is larger, you're never going to want, much more than that open at any one time anyway. Okay. So, 20, 30,000 will have you with a couple of positions open that you're managing and generating a nice monthly income. So that's what I think you need.
All right. William says the VectorVest process you're referring to, is this a separate service? No, we're going to teach you how to do covered calls in this boot camp. Now, we are going to be using VectorVest for things like market timing and stock selection. can you, I mean, you could, we're still going to teach you how to do covered calls, and you could use the techniques we teach you to find stocks. Let's say you don't use VectorVest, which, I mean, we would really recommend you use VectorVest. It'll make your life a whole lot easier. You could just use the, the base VectorVest system. But this is, Jim does have a coaching group where he does this with his coaching clients every week. And he looks for these, not necessarily that if the market is down, he might not find a covered call. But William, we're going to teach you how to do a covered call and the buy right system in this boot camp. And if you choose to continue to use VectorVest, I think that'd be a great decision. If not, you still have learned how to do the covered calls and what to do. All right. Let's see. So I think just a quick reminder, vectorvest.com/cc bootcamp. The $395 rate will be active for a little bit longer, and we're just about to wrap up. But if you go there before, what was it, Monday? You still get a discount on the boot camp, but now is the sweetest discount, let's say. All right, so Jim, I'm going to pass it over to you. If you have anything else you want to say before we wrap up, otherwise I'm going to just pass it over to you to wrap up for the day.
All right, great. Thank you, Brian. Thank you, John, for helping out in the background there. Thank you all who are still here for taking the time to be here. I hope it built a good foundation for you. Of course, we hope to be able to work with you starting next week. Again, this is a trade for anyone, and retirement minded is where I first go. But it's an essential trade for those individual investors who are building, managing their own portfolio, and have either now or at some point in the near future the need for that steady income, that safe, steady income. And keep in mind, understanding covered calls, whether it's the buy rate, which we're going to focus on, but in those live sessions, as Brian noted, I listen, when those live Q&A sessions come on, I stay on until you guys are done asking me questions. Okay. So we'll talk about covered calls. We'll focus on the buy rate, but we'll help in other. If you have stocks and you want to sell covered calls against them, once we've focused on all of the buy rate and all of the techniques for the boot camp, I'll be happy to answer questions on selling calls against stocks you have and some other general questions that you have. So just keep that in mind as you're deciding whether or not to join up. I hope that you do. I think it'll work out well for you. Remember, it is a risk-free trade because we'll give you your money back if you don't. If you join us, I look forward to seeing and working with you next week. If not, that's fine. I hope to see you in the future, and we'll work together next time. So on behalf of VectorVest, Brian, John, myself, thanks for being here, and we'll see you next time. Bye for now.